So first off, I want to wish everyone a happy new year. I'm probably not going to be doing any content for the next couple days. I'm going to a New Year's Eve party tomorrow night, and hopefully it'll be fun. And I will probably be hungover for a couple days, and so I probably won't be able to send out emails and book guests for content probably for at least a couple days, maybe the end of this upcoming week or maybe early into next week. So I want to wish everyone a happy new year, happy 2019. Hopefully your 2019 will be better than your 2018. Health above wealth, so health, happiness, and prosperity to everyone who is listening to this podcast, longtime loyal listeners and new listeners, except for the trolls and haters who, some of them have been abusive, but you guys have been blocked. But you've made me better, though. So sometimes, anger brings out the best in people. Anyways, the reason I'm going to do this short little video today is I've just been hearing from people that they're getting involved in investment products that they should not be, they're trading or using as hedging strategies or trying to make short bets on strategies on things that they should not be using. So some of those are like the 2 times or 3 times leveraged ETFs. These things are extremely dangerous. They were designed by very sophisticated traders and Wall Street people, and they have a lot of lawyer speak in the prospectuses to get themselves out, so you cannot sue them. And basically, whether it's JNUG here in the gold and silver community, these 2 times or 3 times exchange traded funds do not trade the way that you would think that they should. So there's enormous tracking error. We could have a debate about whether or not it's intentional or not, but these things do not trade the way they're supposed to very, very often. And basically, you're taking very, very high risk for limited rewards. And what most people are not aware of, especially retail investors or traders, is that a lot of these leveraged ETFs reset every day. So you think just because gold stocks are doing well every day that your leveraged ETF should be holding steady or going higher, and that is not the case because futures products are involved and there's rollover and you're using debt. The debt is being used by the underlying leveraged ETF. So in general, if you're a retail investor and you're not a hedge fund manager, I would stay the hell away from these things. Unfortunately, I've just heard way too many horror stories about people trading, trying to get rich quick. They don't understand the underlying leveraged ETF, and they haven't read their prospectus, or they don't understand the prospectus, and they lose a lot of money. I've just heard the stories way too many times. So stay away from things like JNUG. Stay away from the VIX ETFs if there's still any of those left. Because when the VIX was moving, when it moved up very high in February, the VIX ETFs did not track the way they were supposed to. And like I said, we could debate whether or not the Wall Street people who designed those ETFs did that intentionally, but the investors who were gambling that the VIX ETFs would make them a lot of money on the VIX spike, things did not turn out, the results did not turn out the way they were saying. The other mistake, and you don't really see this too much from a lot of hedge fund managers who are good at shorting. So as you guys know, I have a very long contacts list. I've interviewed Kevin Duffy, hedge fund manager and professional short seller. He's been short selling stocks successfully, I think, since 1985. Now, obviously, every year is not good, and getting shorting stocks is very difficult, but I've listened to interviews from a lot of short sellers, professional ones who've made a lot of money doing it, and they do not sell naked calls. Okay? So I know there's a temptation there to collect premium. So I'll attach a definition in the Investopedia about naked call selling, and that's where you sell a call to collect a premium on it. But if you're wrong about the underlying stock, or you sell like an option on a commodity, betting the commodity price will fall, and if you use leverage on it, additional leverage, you could blow up. And the case study I wanted to talk about was this optionsellers.com. I have 2 stories for you guys. I'll attach both of them in the information section of this live stream show after it's done. And the first story is from Bloomberg, December 4th, 2018. Wiped out fund investors seek to recoup losses from broker. And it's 12 investors of wiped out investment firm optionsellers.com are seeking to recoup more than $7 million in losses from INTL FCS Stone Inc., the brokerage that handled their accounts. Chapman Albin LLC, a Cleveland-based law firm said it filed for arbitration, blah, 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 blah. The brokerage failed to know its customers, failed to know the advisor trading its customers' accounts, and didn't have the procedures in place to protect and prevent losses in the accounts. I'm skipping through the article. Okay, so disastrous trading in the natural gas market prompted FCS Stone to liquidate about 300 client accounts managed by optionsellers.com after their balances fell below minimum margin requirements. The brokerage said last week in a filing that customer agreements oblige account holders to reimburse it for any deficits, which stand at $35.3 million. Option sellers' implosion garnered international attention after founder James Cordier posted a confessional video on YouTube in which he said extreme volatility in the natural gas market had, quote, likely cost me my hedge fund, end quote. Cordier has written articles on options for publications such as Futures Magazine and co-authored The Complete Guide to Options Selling. So he made a business around this. It was an extremely risky business, and for like 7 or 8 years, he was right. He was dead on. He made many millions of dollars for himself. He built a over $150 million assets under management hedge fund just doing this one strategy. It was not hedged. A lot of other financial professionals would have looked at the strategy he was using and saying how incomplete it was, how dangerous it was, and he would have been probably, this guy James Cordier and his people working for him and his customers would have probably been talking shit to them, saying, you know, we made all this money, you're a freaking moron. And, you know, secretly, financial professionals like myself and others would have just ignored, you know, this cocky guy who made a lot of money for a while and said, you know, I don't know the exact time frame, but eventually this guy, by this specific strategy, it's unhedged, it's so dangerous, the risk he's taking on to get the reward, eventually it's going to blow up. So we don't know when, and look what happened. And if you search these articles with option sellers talking about all the problems, it actually comes up in the Google search. There's a bunch of law firms now that are starting class action lawsuits. So this guy's paying. This guy, his customers now are going to end up owing more money than they put into the fund. This guy's going to end up like losing just about everything. This guy, James Cordier. So he's going to be sued by a bunch of lawyers, bunch of people. You know, this is I don't know if he's married or not, but his wife, like, because his financial situation is going to be changing drastically, his wife may leave him, his kids are going to hate him. You know, it's going to be that type of really bad situation. And that's how risky selling naked options and not having protection is. Because if you're wrong with your fundamental analysis and the direction of that trade, if you're not hedged, and say the natural gas price has a rally like it did starting, I think, 6 months ago, the natural gas price went up a lot, I think over 30%. The trade went against him, and he had been doing this trade like clockwork for years, making a lot of money, many millions of dollars. Trade went against him, and he blew up very, very quickly. Now he owes more money than even his investors put in. Scary situation. And, you know, he wasn't hedged. He was selling call options, collecting premium, and for a long time it worked. And the other reason the trade blew up is not only was he just doing that and selling naked call options, he was borrowing margin and doing it with leverage to make even more money. So the trade was working well, and he kept layering it on and layering it on with leverage. Very, very dangerous stuff. And I'm sure, as you guys can think about this, if you interviewed hedge fund managers or financial professionals and asked them about selling naked options or selling calls or selling naked calls, they would say that, okay, well, you can make some money on it, but if that's your whole investing or trading strategy and you're unhedged, it's very, very dangerous. You're going to blow up. I don't care if you made $100,000 on a million trading stake or something like that in a year or two. The odds are that over the long term, if you keep doing that strategy, you're eventually going to blow up. So definitely, if you're planning on doing, the main reason, you know, I'm doing this short little video as a public service announcement, again, not financial advice, I want to educate you guys. I'm attaching links to Investopedia so you can read about naked call writing where the risks are highlighted. Talks about the trade, talks about the risks. I'm attaching stories about the optionsellers.com and how and why they blew up. But the reason I'm doing this is because, you know, there's going to be, in my opinion, a lot more volatility in 2019 and going forward, as long as these central banks are pulling liquidity out. And if the Jerome J. Powell Fed, if President Trump does not fire him, if they continue to hike rates, there's going to be more volatility in stocks and other asset classes. So the less amount of volatility that we had for a while, up until like August of this year, give or take, those days of very little volatility are pretty much gone. Okay. So something else I wanted to talk about was also, an example of this too is the Tilray marijuana. So I believe I did a video on Tilray talking about Tilray Marijuana Corp and going through their annual reports and quarterly reports and reading some of the stuff in there highlighting the risks. And I also said, I don't know if it was that video or if it was a week or two later, but I also said that the marijuana industry is going to trade very similarly to the biotech industry, meaning that even if there was no revenue growth or earnings growth for some of these marijuana companies, if they issued the right press release, it would totally stop a downtrend. The stock would move up. Anyone who is short the stock based on bad fundamentals or bad earnings announcements or things like that would get killed. And we saw that recently in Tilray. So I believe Tilray got as high on September 19th, I'm on Yahoo Finance on the stock chart. It got as high as $214 a share, and it temporarily crashed, and then it got back up to like $164 a share on October 1st. And so then it's been up and down, and then it got in a big downtrend until, let me see the date here. It got in a big downtrend. There was a lot of volatility, obviously, but it got in a big downtrend until December 17th. So only 2 weeks ago about. And the reason the stock has started to reverse now is, like I said about the marijuana industry, that it's not being driven on earnings growth. Okay, so some of these companies are growing revenues rapidly, but the losses are actually growing as fast, if not faster, than the revenues are growing. So the market is ignoring the losses that these companies are accumulating to grow the revenues. But Tilray on December 19th, and I think, there was probably, unfortunately, this is how, immoral and corrupt a lot of our stock markets are. There's really no way of fully stopping this. There was obviously insider information that was traded on in Tilray because someone had the news announcement about the press release or whatever that AB InBev, the largest beer company that owns Budweiser, that them and Tilray announced a research partnership focused on non-alcoholic THC and CBD oil beverages. So that press release came out on December 19th, and since then the stock, which was in a very serious downtrend since basically September-ish, when the stock got super high, and obviously there was rallies along the way. If you look at the stock chart at Tilray, it was very volatile, but the downtrend has basically stopped, at least temporarily. So if you were shorting the stock and you didn't short the stock on the right timing, and you were doing that naked call option strategy, if you didn't time things right and you pay attention to the stock and understand what I told you about how, if the wrong press release came out, you were in trouble and you weren't hedged, that's how you could get in a lot of trouble with that naked call selling strategy. This is why a lot of financial professionals don't use that naked call selling strategy, okay? These hedge fund managers, this is their full-time job. They spend all of their time looking at different strategies. Maybe they use a little bit of those strategies like naked call selling, but they do not put a lot of their portfolios into those types of strategies. They're just too risky, especially if you unhedge them. Most of the professional shorts I know either outright short the stock and they borrow the shares, but then if you are borrowing a stock that's already very heavily shorted, it's tough for your stockbroker or the brokerage house or investment bank that clears your trades to get the stock, and they're going to charge you a higher fee to borrow the shares, a higher interest fee, or they do puts. So you can lose all your money on puts, but your risk is controlled as long as you don't use leverage to buy the puts. So that's what most hedge fund managers I do when they're bearish on a stock or a commodity or something they do. They do not sell naked calls. There's a reason for that. Okay, so that was my public service announcement for the risky things with the leveraged ETFs, both bullish and bearish leveraged ETFs. Those things are not meant for retail investors. Even financial professionals, most of the ones I know avoid those. Unless you're day trading and you close out positions daily, because they do not track the way they're supposed to. And let's see here. Let me check the rest of my notes. This is going to be a shorter show today. Okay, so one of my listeners brought up Fortuna Silver, and he says that it's a better investment than Sandstorm Gold, and I totally disagree. Now, I think Fortuna Silver is a good speculation, but I think there's still a lot of risks with it. So I took a look at Fortuna Silver, and one of the first things I saw was I think they only have 2 mines in production right now, and both of them are silver mines. So they have the San Jose mine, which is silver and gold in Mexico, and they have the Caylloma mine in Peru. And Fortuna Silver, the share price is, if you're not familiar, the share price is around $3.58 on the New York Stock Exchange. So it's essentially a penny stock that a lot of mutual funds and some of the mining stock exchange traded funds cannot fully hold. And they have 8.3 million ounces a year silver production, and as of right now, 48.3 thousand ounces of gold. But their new mine, which they're bringing online, is a gold mine. So I think it's interesting with Fortuna Silver. I think it's a good speculation. Their balance sheet looks pretty good as of right now. But there's always a risk of bringing a new mine online that the mine doesn't come online on time and on budget. So that's the risk there. But in general, the mining company business model is inherently flawed compared to royalty and streaming companies. So like Wheaton Precious Metals and Franco-Nevada and Royal Gold, the larger royalty and streaming companies, they have a larger portfolio of diversified assets generating cash flow, and they only have about, I think most of those guys only have about 20, 25 employees. I think Franco may have 40. But even still, that's a tiny fraction of the overhead costs compared to a mining company. So I think Fortuna Silver is an interesting speculation, but this is not a company that is consistently profitable right now. In fact, it looks like that. Let me check their investors presentation again really quick. It looks like they're not currently super profitable right now. So they're not hedged with their precious metals, which is good long term. They do have a lot of cash in their balance sheet right now, which is solid. But their share price is down 30% since December last year. I think it says here in their presentation. So they say that their all-in silver mining costs are $11.90 per ounce. But I don't know if they're enormously profitable right now. So I think it's interesting that they're planning on bringing online a gold mine. So they're bringing online the Lindero project in Argentina. It's got a 13-year reserve life, low all-in sustaining cost, but the production on the mine is going to drop a lot after the first 4 or 5 years. So this is not the world's best low-cost gold mine that can produce, a very high gold production for 10, 15, 20, 30, 40 years like some other gold mines that are bringing online. So Fortuna Silver does look like a interesting speculation. However, I do not think it's a really good long-term investment. But then again, I don't think any mining company per se is a good long-term investment. Yeah, the option seller story, the whole story about the option seller stuff is really a tragedy, and it's a big red flag, big warning sign to not put all of your eggs into one basket, and that the naked call selling strategy, if that is your entire strategy, you might do really, really well for a while if you're lucky. Obviously, he had some good research on shorting natural gas with the glut from the shale oil, but eventually you knew that trade was going to blow up, and he kept doubling down on that trade. I don't even know how much of other diversification or hedges he had in place. He made a lot of money doing it for a while, but now he's in a very, very bad place, this guy at Option Sellers, where he's probably going to lose everything. He's going to be sued by maybe hundreds of different people, dozens of different, fancy, high expensive fee lawyers in class actions. And, this is a type of situation where his family could be ruined. His wife could leave him and divorce him, and, it could just be a vicious cycle. Okay, so I'm going to take listener questions really quick. Okay, I can't read a bunch of gibberish letters. You got wrecked with Nugget. Yeah, so there's different. Nugged Dust is the short gold miners ETF, DUST. Nugged, I don't remember offhand. I know JNUG is like the triple leveraged gold miners ETF. Not familiar offhand with NUGT. But you're running, unless you understand, you read the prospectus and you understand the risk, you're still it's still very, very dangerous for these double leverage and triple leverage ones because they reset every day and they do not track the way normally that you think they will track. Twister, which area are you in? What area are you talking about? Are you in the DC metro area? I don't know what you're talking about, buddy. STC eGolf, there's a general lack of liquidity in the options market in general, and this should have been the red flag for Bernie Madoff and the Madoff Ponzi scheme, because he claimed that his split strike conversion options trades were generating him, many billions of dollars per month doing a certain type of option strategy, and Harry Markopolos in his book No One Would Listen and the other evidence he gathered, he proved in 10 minutes that mathematically there wasn't enough options trades, that it proved that Bernie Madoff wasn't doing the trades he said, that the trade tickets were phony. So in general, my point is that pretty much all the options markets are not liquid compared to a lot of other stocks. So for example, Apple stock, there's tons of trades in Apple or Facebook or some of these other large, or Google, some of these other large trades every single day, but their options markets are very illiquid compared to that. So in general, the options market is not super liquid. And some options markets are even less liquid than you would think. Hey, Luminary wins. I think the plunge protection team is all in. And a lot of it has to do with what I said in the last couple live streams. It's all about U.S. government annual tax receipts. The government has become increasingly more reliable in the last 10, 15, 20 years on capital gains taxes on stocks, bonds, and real estate. Okay? So when push comes to shove, in my humble opinion, again, not financial advice, this is why all the different plunge protection teams, the people in the Fed and the Treasury, do not want asset prices staying low without more and more intervention, as Ludwig von Mises said. In my opinion, I don't think they will allow lower asset prices without more intervention for more than like 12 months. I'm not even sure if they will allow it that long at this point, with the craziness and the rules changes and how desperate the people in power are to lie to us with propaganda and to maintain the status quo. Meanwhile, if the stock market does crash, Peter Schiff may be right. We may have a socialist president here in the United States in 2020 or 2024. Peter Schiff may be right about that. A full socialist president in the United States. Hey, Tin, I did not see the flash crash in gold tonight, but I'm sure it'll bounce back pretty quickly. So the dollar index it's below 97 again. We'll see if it keeps closing below 97 for a couple more weeks or a while. That the 97 may actually end up being the top in the dollar index. I don't want to call it yet though. But I think the gold stocks, a lot of the good gold stocks with the best fundamentals, especially the 5 largest royalty and streaming companies, are showing there's accumulation patterns in those charts. The traders have told me that the charts on a lot of the royalty and streaming companies, especially Sandstorm Gold, look really, really good now. That the long-term charts look really, really good. Well, political prisoner, the Kitco charts are whitewashed over to remove those big price changes just a few minutes ago. I screenshotted them. We know the gold and silver markets are manipulated. Even that trader from Deutsche Bank, he said in open court, I don't think they fully sentenced him yet. I think they delayed it for another 6 months to the summer. But he said he learned it from his bosses, and he said a lot of the other investment banks are all like actively involved in manipulating gold and silver markets, and no one seemed to care. So, I mean, this just adds to it. We have Alan Greenspan's on audio. I've heard the audio. Lots of you guys have heard the audio. Alan Greenspan, I'm not sure if he was saying it to Ron Paul or if it was just at another committee hearing when he was Federal Reserve Chairman. He said that should the gold price spike rapidly, that the Federal Reserve was ready to sell more paper gold into the market with gold leases and gold swaps. Okay, so manipulating the gold and silver prices is part of U.S. government monetary policy. There was also a book out from Dmitry Speck, I forget the name of it, and this was when the gold price was going crazy at 1900, and there was problems in Greece, and the U.S. credit rating was downgraded by one company. Note how the U.S.'s credit rating hasn't been downgraded again. Because they were all these other credit rating agencies, which are corrupt and stupid, were probably threatened. But according to the book from Dmitry Speck, his sources in Europe, he's European, he said that the European Central Bank and other European politicians were going nuts with the gold price going that high up to 1900. That they were demanding that there was intervention and manipulation of the gold price, that it was causing panic in Europe. Because there were Europeans starting to go out and buy gold and silver. They saw the gold price and they're starting to buy gold and silver, and they said they didn't want that. Hello, Luminary Wins. Yes, U.S. tax receipts with the Trump tax cuts have actually fallen, so they're going to have to make it up somehow. Those budget deficits are blowing out. Right now, it has not hurt the dollar. It has not hurt the dollar yet with those U.S. Budget deficits that are blowing out. Record amounts to them in a short amount of time. This is the danger with doing supply-side economics when your debt-to-GDP ratio is already high, when the Federal Reserve is hiking interest rates and the budget deficits are already big, and then you add on to them rapidly with enormous tax cuts with supply-side economics. And I heard this somewhere too recently, that this is the first time, I believe, in history where you have the Federal Reserve hiking rates a pretty decent amount, although they're quarter point, but you also have, on the other side, you have the U.S. blowing out enormous budget deficits. So this is the first time in U.S. history where there's enormous rate hikes, where there's the rate hikes are not enormous, they're quarter point, where you have rate hikes plus enormous budget deficit growth. So something's going to give. We'll see when. Obviously, there's cracks in the stock market. We'll see what the plunge protection team decides to do. Support your president, buy the dip. That's funny, White Wolf. White Wolf, what's the bottom? Stocks, gold, silver. This is Spag. White Wolf, you can tell if a politician is lying because their lips are moving. Agnico Eagle, I see in the comment section 10, Agnico Eagle is a solid large tier gold miner, but I can't remember if they're bringing on a new mine. I haven't looked at them in a couple months. So it's normally a pretty solid company, but if they're bringing on a new mine, they could have problems with that. If you're bringing on a massive new mine, there's always the probability that the mine could not be on time and on budget, and they could have to go to the capital markets, and this is a very, very bad time to go to the capital markets. In fact, First Majestic Silver just did, they issued a press release for another equity raise. I predicted that in my one-page blog article on Seeking Alpha. I predicted basically that First Majestic Silver was going to have to do a capital raise. I've been saying that for a while now in other live streams and in my article there. So I could see a situation where First Majestic Silver, they're not going to go bankrupt, but they may have to sell a larger gold stream on one of their other mines. Tesla's a mess. Milton Churchill, Tesla's a mess. Elon Musk, if you see, there's a video by Thunderfoot out there on YouTube showing how basically Elon Musk built a crappy tunnel, and he showed the math that Elon Musk is not going to solve the traffic problems even with the elevator running and the tunnel running at. And there's also Zero Hedge articles that basically money was moved from SpaceX into the tunnel company. So he's moving Elon. People love Elon, especially people on Wall Street and Silicon Valley, because he's made them a lot of money. There is a blind cult worship of Elon on Silicon Valley. I've gotten in arguments with Silicon Valley people in my Wall Street for Main Street Technology Facebook group. Tesla's bonds, Milton, Tesla's bonds are showing enormous weakness, but their stock price hasn't crashed yet. So there's a dislocation or divergence between what Tesla's bonds are saying and what Tesla's equity is saying. So normally that divergence doesn't tend to stay there for too long. Hey Max, I think Jim Cramer is a paid clown. He's a very highly paid clown. And you have him doing passive-aggressive bullshit insults to Jeff Gundlach. And Jeff Gundlach was courteous enough to spend an hour of his time. He doesn't need any money. He is courteous enough to spend an hour of his time on CNBC for free, probably for free, talking about how he sees markets. And then Jim Cramer, Mr. Clown Pumper, highly paid clown pumper now, who did insider information, and he's on video, admitting that he manipulated markets, is, making snide little comments to Jeff Gundlach. If I was Gundlach, I wouldn't take that crap. Hey, Jesse, exactly. This is the main problem that Tesla bulls won't admit. They say that Tesla's a first mover and that Tesla has the best electric car by far. And they say that the car companies, all of them, BMW, Mercedes-Benz, Jaguar, Audi, are all morons. They're all liars. They're all corrupt. And that they can't make a good electric vehicle. I would beg to differ. And I think at least one or two of these electric vehicles will, over the next 3 to 5 years, absolutely take an enormous amount of market share from Tesla. The Porsche, Jesse, the Porsche electric vehicle, I think they changed the name again. I covered this over the summer. That thing looks amazing. How quickly it has 600 horsepower and it goes 0 to 60 in 4 seconds. I think it's sub 4 seconds. So for the rich Silicon Valley guys who want to put a luxury electric vehicle in their garage next to their Ferrari or their Bentley, the Porsche electric supercar, electric sports car, is going to be probably better for them than the Tesla. Exactly, Jesse. We know this from Doug Casey. The pioneer gets the arrow. The first mover doesn't always succeed. In a lot of markets, Jesse, the first mover, the first company to do this, they may succeed for a short amount of time, for a couple years or a couple months, and then they make too many mistakes, and the other competitors who haven't put a lot of money into the new market learn from the mistakes of the pioneer that got shot full of arrows. Hey, Omar, I've been saying for months now that GE is going to have to be restructured and that the bankers who have their bonds and have their revolving credit facilities are going to decide whether or not if and when GE gets restructured and bankrupt. Biodiesel is actually a good fuel, but there's scaling problems with it right now. So there's companies that try to do biodiesel with used restaurant grease that were buying it from Tyson Foods, and they had an interesting business model, but they just didn't execute it on it. There was a couple publicly traded stocks on it about 5 or 6 years ago, like Syntroleum and Rentec, and I believe one or both of them sold their businesses to larger oil companies or other companies because they just couldn't do it. They couldn't scale it enough, and they weren't big enough to handle all the costs and scale it properly. But yes, that is, if you can do large amounts of restaurant grease, you can recycle that into fuel. The batteries are still, Luminary Winds batteries are still an enormous issue. There's not the advanced battery technology yet that we need. Hello, White Wolf. I wouldn't call Trump a socialist. I would say he's more of a, fascist. So everyone thinks of, Hitler as the main fascist, but it's more of like Mussolini, where it's like merger of state and corporate interests. So I would say Trump is more like that, where he's helping out big corporations. He hasn't drastically cut the regulatory budgets or anything like that. There has been some regulations that Trump cut, but overall, a lot of his economic agreements are not really that much different from NAFTA and some of the others. Yeah, STC Golf, the last 2 weeks, I think the plunge protection team has been very accurate. They've tried to engineer this Santa Claus rally. And you're seeing that the mainstream financial media is saying that there's going to be a rally in January in the stock market. And now you have President Trump is adamant that, oh, we're close to a trade deal with China. But, I mean, from the stuff I'm hearing out of China, I don't think China is going to agree to a lot of the terms, especially on intellectual property. I think there's very little chance that China is going to agree to any of that. Oh, we'll be around in 2020, White Wolf. It's just, I mean, the world's just getting crazier. I think there's going to be a lot more social unrest. Like, you're seeing it erupting more in Europe right now, but that's going to be coming to the U.S. You have some of it in the U.S. already, but I mean, like, not to the levels of protest where there's everyday enormous protests for an entire month or more in France. That hasn't quite reached the U.S. yet, but if things do get worse, if the stock market does fully crash, then you could see worse than Occupy Wall Street hit the streets in the United States and a lot of major cities for a long time. Char Beltran, will silver break $20 in 2019? If silver does not get to the $18 to $21 level, I don't think a lot of the primary silver miners are going to be able to maintain production levels for much longer. As Nolan Watson said in my interview with him in the last month or so, he said that basically almost every single primary silver miner is not making any money mining silver now. So a lot of silver miners, and this includes Fortuna Silver, which the guy Wendell brought up in the comment section all the time, even Fortuna Silver and a lot of these other silver miners are buying gold mines because there's better margins there. So I think for the silver market to fully clear, we need to see some of these copper and base metal miners go bankrupt, and they need to reduce their silver production. I'm not sure exactly when that will happen. Maybe it will happen soon. I would be paying attention in the news for those stories. But basically, there are very few new primary silver mines that can be brought online at an economic price. I believe Argentina, you have Yamana Gold, which has already brought online the Cerro Moro gold and silver mine. That mine's economic. Sandstorm Gold has a silver stream on there that kicks in 2 days. So that's going to be a lot of cash flow for Sandstorm Gold. And then the only other new basically economic silver mine that's anything close to economic is Mag Silver. I think Mag Silver is one of the best silver mines I've seen in, it's probably a generation or two. It's really, really good. It's 400 grams per ton, and there's a 30-year mine life on it. But if you speak to, it's a $10 all-in sustaining cost mine life too. So it's pretty low cost. It's got really high grade, and it's not a normal junior where they're building the whole project and they're risking the whole company on this mine. They have the partner Fresnillo, which is one of the largest primary silver miner in the world. Although now Fresnillo makes more money mining gold now than they do silver. That just goes to show you how out of whack the silver market is, because the primary silver miners are all, they're making money off their gold production and buying gold mines because they can't make any money off silver, mining silver. Hey, Jesse, there may be some mean reversion on palladium because these trend trading hedge funds are going to be trading the momentum, and they probably don't care about fundamentals. And if there's a short squeeze on there's a lack of physical metal there to deliver on the LBMA. But if you're going to short something, I would hedge it. So you have to protect yourself. This is not financial advice, stupid disclaimer. But if you're going to short something, you have to hedge it. So maybe you buy a call option on it to protect yourself or some other type of hedge. I would not outright short anything. It's safer to have some type of hedge in place. Shorting is very dangerous. If you have a subscription to Real Vision TV, there was an interview about a month or so ago from a professional hedge fund guy, and he was talking about how basically short selling is about 3 times harder, and he named all the different ways to succeed shorting something than it is to just do research on a stock and see that the company's growing revenues, growing earnings, growing free cash flow, their margins are good or expanding. It's a lot harder to make money shorting something. And you add in how basically now shorts are totally vilified by, on social media, by the mainstream financial media, by often companies of publicly executives of publicly traded companies, and sometimes a lot of these executives of publicly traded companies are not honest at all. So they will go out of their way, even if they're knowingly committing fraud and lying, they will go out of their way to sue and ruin short sellers who are just doing research and doing hard work. And most people don't realize this, but every market there has to be a buyer and seller. So there are fraudster short sellers, but there are also hardworking, honest short sellers that do good research, put their money where their mouth is, and are risking, losing a lot of money on a trade. And to lump all short sellers in as fraudsters, I think, is incorrect. I've learned that over the last year or so, a lot more than in the past. That, I used to have this, I think, because the narrative in the mainstream financial media is how bad all short sellers are, and politicians bring up evil short sellers and stuff like that, and I just think it's totally incorrect. Hello, Peter. I think from a geological standpoint, now there could be issues at constructing the mine and the mine coming on time and on budget. But from a geological standpoint, from all the economic projections I've seen with the Mag Silver One Scipio mine and how they have a legitimately large partner operating that is operating the mine, and Mag Silver is just along for their 44% joint venture interest, that is an ideal situation for me. Things could still go wrong, but I think worst case scenario for Mag Silver is they probably end up getting bought. Now, we know that Fresnillo tried to buy them years ago, but I think the rumors I've heard, these are rumors, not, just speculation and rumors I've heard going around, is that Pan American Silver wants to be aggressive. They think silver is close to a bottom, and that Pan American Silver wants to buy out Mag Silver. That's what I've heard. And if so, Pan American Silver will have, in their reserves, they will own access to basically 3 out of the 5 longest, high-grade, long-life primary silver mines. So when the silver price does rebound, Pan American Silver will be in superb shape if they do end up buying Mag Silver. Pan American Silver will basically have growth for decades then, if they do buy Mag Silver. Now, in the short term, that may make Pan American Silver share price go down, but in the long term, they would have, access to the... Okay, they already bought Escobal. They bought Tahoe Resources, so they have that in Guatemala in their portfolio. They own the large open pit silver mine, what's it called? In Argentina. That one was temporarily delayed for the last few years, but that may be brought online in the next couple of years, and then they would own, potentially the Mag Silver mine. That would be a just absolutely massive company. Okay, guys, well, I'm getting kind of tired. My voice is getting kind of weak right now. Oh, couple more show notes things. So I do get too many long emails from some of you guys, and some of the emails I get from you guys are really nice and thoughtful, and I appreciate it. But some of the emails I get, long emails, sometimes 5 pages or long emails demanding I do all these free things for you. So if you're doing those emails and sending them to me, please stop doing that. Okay? Please stop doing that. And the one guy who I had to block in the last couple weeks, he was abusing me for 45 minutes straight in the comment section, just nasty posts talking about how bad of a person I was and how I deserved to have my channel ruined and I deserve to not have any new subscribers on my channel and how bad my content was. And don't say stuff like that. That's abusive. Don't say stuff like that and then call it constructive criticism. Okay, buddy? You need to look in the freaking mirror. I can guarantee you that you're rationalizing a lot of your other poor life decisions and you treat other people badly. Don't do that. Okay? Don't abuse someone and call them all those nasty names and say they deserve to fail in life and then say that's constructive criticism. It's not. And there's no way you'd say that to my face, dude. I'm 6 foot, 225 pounds. There's no way you'd say that to my face. I'd just stare you the fuck down. Okay, guys. Well, that's it for today's show. Everyone have a happy new year. I wish you health, wealth, and happiness in 2019. And I will work on getting you guys more great content in the coming weeks ahead. Okay, bye for now, guys.